Hi, welcome to Module 3B. In this module, we are going to look at some spreadsheets and how to use them, how to test our business model. Excel or any of the equivalent products, any kind of electronic spreadsheet is really great for a small business and for working some of these business model issues, because it makes it simple to do what-if scenarios, to try different things. Suppose my pricing's different, suppose my costs are different, and also to come up with projections for the first year. And you can play lots of games and run the numbers to see what would happen if certain things do or don't happen, and see what the business may look like. Again, going back to the first week, doesn't say it necessarily will happen, but it says that, can the business work? If it doesn't work on paper, it won't work. That was our premise from the first week. Well, here is the first example you actually have as a resource in Moodle for this week, the consult.xls, an Excel spreadsheet, and it's got 3 tabs. So if you open that up in a separate window, that would probably be good, because you're going to find it very hard to read from these particular charts. You'll find it much better to just follow me from the spreadsheet itself. Well, here's Bob's consulting business, similar to the first week that we had, and a what if. The second tab, again, a little difficult, quite difficult to read. But if you, as I say, if you have the Excel spreadsheet open, you can see it much more clearly. And the left column over here is your what if. What if my average fee for service is, and that translates into the average billed per contract. All right. What if I'm able to perform or deliver so many contracts a month, so many jobs, and that turns into monthly contracts. And you can see how it trickles down. What if? What's my cost for employee benefits, equipment, copy paper, computer supplies, things like that. That turns into expenses. Again, this is our, what looks like, a what if kind of income and expense or profit and loss statement. And over here, these are not months, but rather numbers. Each one represents a month, but the number of contracts. What if I can do 5 contracts a month, 6 contracts a month, 7 contracts a month, and so forth? And the numbers trickle down and show us what our expenses are, what our cash flow is. And the difference between the cash flow and profit and loss is depreciation. Depreciation in this spreadsheet is not included in cash flow, because we're not getting any money back at this point from the depreciation. And it shows us whether or not we're going to make a profit. And in this case, as you can see in the example, it's only at a fairly low level that we're not making a profit. If we're only doing 5 contracts a month, we've got a negative cash flow, negative profit. but once we go to 6, we start to turn the corner and make a little bit more money. So that's goodness. You'll see that over to the right here, up in the second category, up in this area, again, I suggest you look at the actual spreadsheet. You know, when we get to a certain level, we've got to add some resources. And that first one is a secretary. You know, maybe we can do without the secretary until we reach a certain level of business. And then in a similar fashion, down at the next line, you'll see that, again, at a certain level of business, we decide that we need to bring on a second consultant. And that's going to increase our costs, drive down our profits somewhat. But again, at least the way the numbers look here, we should be at a profitable level, irrespective of having to add those expenses. But again, if we went in and added them too soon, and you said, well, gee, really, I need this other consultant at a much lower level. I need him back around the nine contracts per month. You know, I can't wait till I'm up to 12 contracts a month. Well, then I think if you plug those numbers in and change that, I think you'll see the thing turn negative. And of course, that's not what you want. The next step after that would be to come up with a sales projection, a sales forecast. And this is, as you can see, a monthly chart. Again, look at tab C on the actual spreadsheet, and it'll be very clear. And here we're saying, okay, how many contracts are we going to sell? We're going to start out, maybe we've got two friends, you know, two clients in our back pocket that say, hey, as soon as you go into business, I'll give you, you know, we got a contract for you. We can get you started, you know, give you some initial business. So we expect to get 2 contracts in the first month, assuming we're starting beginning of January. And the business, as you can see, grows and grows nicely, and our expenses and everything carry down from the first page. Now down here you'll see cash flow and monthly profit. You'll note that for the first 4 months, down here, we're losing money. We're negative. And it's not until May that we start to turn a profit, a cash flow of $227. Okay, and a profit of 27 because of the depreciation coming out as an expense. Well, does that mean we're okay? Well, what does this thing tell us? It tells us that for the first 4 months, we're running negative. And if you add up those numbers, it's about $13,000 or $14,000. Okay, the sum of January, February, March, and April, it's about 14 grand. So we're about 14 grand in negative in the hole as of May. And we start to recoup it in May, but it's going to take us a while to get it back, to get back to zero, to where we were. So it means that for that chart, sources and applications of funds, we had better figure at least $14,000 or $15,000 as working capital to pay the rent, to pay the expenses, the telephone, utilities, all the stuff that has to be paid for those first 4 months, because we're going to be out of pocket for those first 4 months. And it's going to take quite a while for us to recover that. Okay, you can see, you know, we're getting about $3,000 a month, and finally we will recoup, but again, it takes a while. Okay, there's a second spreadsheet that's on Moodle, and that's the carwash.xls. I suggest you open that. Take a look at it. Again, it's very similar. It's got 3 tabs, and it's a what-if scenario. In similar fashion, tab B on this spreadsheet says, what if the average price for my car wash is $4.95, and I'm able to produce or sell 1,500 car washes per month, or 1,750 car washes, or 1,950, or 2,200. Again, this is not a forecast at this point. This is a what if I can sell. The second tier costs over here, that's the additional items that you sell. Well, what is that in a car wash? Well, if you've been to a car wash in recent years, you know they sell everything: greeting cards, air fresheners, floor mats, sometimes magazines or newspapers. And you may buy some of that stuff while you're waiting for your car to go through the car wash. So, and that typically is, some of that is profitable. And you can see the, cost of goods sold down here, and the second tier costs of the supplies, 25% of what you sold it for. So that typically that has a really good profit, really good markup. Our operating expenses, our payroll, payroll taxes. We'll talk about taxes later in the course, but you as the employer have to pay payroll taxes to the state and federal government, and typically it's considered 15% of the payroll. Question: how do we determine, how do we pick a price? The first page there shows, or the first tab, so we're based on an average price of $4.95 per car wash. Well, where did we come up with that number? Well, it's our best guess as to what we can sell it for. How did we find that out? Well, probably having checked out car washes in the area. What are they charging? What is the competition charge? How do we compare? How is our car wash going to compare to theirs? Can we charge a little bit more than them, or do we have to charge a little bit less because we're not as good, not as fancy? That's a decision you have to come up with, and of course these numbers in the spreadsheet can be changed. Again, we have our fixed expenses, and down here we have monthly profit and loss, cash flow. And if you look at this example, and again, it's best looking at from the actual spreadsheet, what you want to do is, you see here we have all the negative numbers at these different volumes. And it's not till we get over here which is 2,900 car washes per month, that we're in the positive cash flow, positive profit scenario. At 2,500 car washes, we're operating at a loss. So what does that say? That says our break-even point is someplace between 2,500 and 2,900. Mathematically you can figure it out exactly, but close enough. Probably we need around 2,700 car washers or so to break even. and and of course we don't want to just break even, we want to make a profit. Okay, I recommend that you take a look at the spreadsheet and look at each of these what-if categories, what it translates into for a profit and loss statement, and the various scenarios. As we did with the consulting, tab C is a sales projection. Again, this is by month. We take our best guess as to how many we can actually sell per month and how much money we can come up with. And you can see again that our profit and loss, we're running negative for the first 2 months, and it's taking us a while, taking us at least 2 months to turn a profit. But again, we're not recouping that roughly $5 or $6, close to $6,000, that $5,500, it's closer, that we're out of pocket. We haven't recouped that yet. So again, we need working capital of at least that amount to keep us going until we turn a profit. And again, what we're doing is we're showing in January a number of car washes. They come up a bit in February and March as our business gets established. Runs pretty good. Then back in December, sorry, that shouldn't have popped up in there. In December, they drop down again. This is a seasonal type business. So again, don't plan on your business growing month by month by month by month without any changes, because if you're in this kind of thing, like a car wash or something else that's seasonal, that's not reality. So you have to really, really check. Pretty much straightforward. Again, look at it. Either these spreadsheets or both, use them. Modify them to fit your business. Feel free to put your numbers in there and your business name. You can look at the spreadsheet, the way the numbers get massaged, the expressions and how they go down, and use it for your own purposes, for the purposes of this course, for the purposes of starting your own business, if that's what you're really going to do. Again, I have absolutely no problem and would love to have you actually use these things and apply them. You saw this chart in the last module, okay, as a break-even, the break-even analysis. Again, neither a profit nor a loss is incurred. It's based upon volume. We'll look at this a little bit deeper as we get into pricing. And again, it's the volume of sales needed to cover your variable expenses and your fixed expenses. And again, we looked at this chart in the last module and said that over here to the left, where the revenue is lower than the total cost, we're operating at a loss. Finally, we break even, where neither a profit nor a loss is made. And then up here, where the revenue line exceeds the cost line, we're operating in a profit. So again, straightforward, but an important concept. Question: can we have multiple break-even points? And if so, why? What factors could cause something like that? I've already mentioned that in terms of variable costs, you could have, you know, perhaps buy stuff in volume, buy your raw materials, your supplies in volume at a lower unit cost. Okay. What about fixed costs? Can they vary? Doesn't sound right, but could they change? Let's put it that way. Could your fixed cost change? And if so, why? And how, if you had that kind of scenario, would it generate multiple break-even points? And if so, how would you evaluate the business situation? I have put up for next week, opening next week, a forum posting so that we can take a look at this, and I'd like to get your feedback, and we'll explore this a little bit more interactively, as it were, and see where we go. Okay. Next week, which is week 4, we're going to take a look at product planning, market planning, and customer service. I bring customer service in at this point, even though the text doesn't at this point, because customer service has to be thought about from the beginning of planning your product, planning how you're going to market it. Because customer service, unfortunately, in many companies in the past has been an afterthought. What happens if it breaks? What happens if it doesn't work? Who's going to, respond to these kinds of problems? Well, customer service is much more than that. And in today's competitive business environment, where there are lots and lots of products out there and companies giving good prices, and particularly, you're dealing with the Walmarts of the world and stuff like that, sometimes it's customer service that can set your business above the competition and make you successful. So we got to do that right from the beginning. Be sure that you read the supplemental readings for this week. There will be supplemental readings for next week as well. And also, in this week, you'll see there is read for next week material. That's going to be pretty much a standard part of the course from here on out. Read for next week, because it'll give you some additional background beyond the text. Textbooks, unfortunately, even though we try to use the latest editions, by the time they get into print, they're sometimes a little stale. And of course, the textbook reflects the opinions and experience of the authors. And to try and round this out, I typically put other materials in from other sources, and hopefully they are timely and relevant to the subject. So again, please make sure you read the supplemental readings, make sure you read the text, and always read the read for next week material. And we'll see you in week 4. Thank you.